Are you an immigrant? Are you planning to move into the US anytime soon or in the future? Then look no further. This video is for you. So in today's video, we're gonna be explaining about how to quickly build your credit history as an immigrant. What is credit history? So credit history is a 3-digit number that is given by the Consumer Reporting Agency to gauge you on how good you can be able to pay your debts. The 100% credit score is represented by the credit wheel, which is subdivided accordingly. The subdivision of this credit wheel is done using few factors. These factors are payment history, debt amount, your credit history, like how long you have had that credit, new account you have opened recently, and some credit mix, which is just the miscellaneous. So this will, having 100% to represent the whole wheel, the biggest subdivision that is used to determine your credit score is the payment history. How good do you pay your debts? How good have you been paying all the debts you have owed people, or you have owed banks or other places? Even your phone, how you pay your phone bill, stuff like that. So this represents the biggest score to determine how much you can be given. If you have 100% payment history, your chances of having a greater and a high score increases. So the other determining factor is the debt amount, how much you owe people. This debt amount is used to represent the income ratio. If you have, this is your income, so let's say this is your income, this is how much you owe people. You cannot be loaned more than you can be able to pay. The income minus the amount you owe people, the remaining amount is within what you can be loaned. So this is the next factor that determines how much you owe people, is the next big share that determine your credit score. And this one is at 30%. Between payment history and the debt amount, those two, they carry 65% of the 100%. So what does that mean? That means if one of the two is not good, then your credit score will go down. The other thing that determines is the history. The history is how long you have had this credit history. How old is your credit history? How many years of credit history are we looking at? So the more the years, the more the trust, and the more they know you in detail. That one only carries like 15%, but it is very important. That factor is very important too, including the rest. There is a way of going around this factor of the age of your credit history, and stay tuned, I'm gonna explain that towards the end of the video, how you can bypass that if you follow the following steps I'm gonna give at the end of the video. So the other one, the 10%, is the new account. So if you open a new account, that means you have borrowed more money in another account. Your share keeps on going down. So if you were able to be loaned like 50,000 and your debt was 30,000, now you have 20,000 remaining, and you open another account of 5,000, that means your debt increased, and now the remaining that amount that can be loaned decreased. So opening a new account decreases your score for a while until you catch up on the payments of the accounts. So the other one is just the miscellaneous, which is 10%. On the same wheel, now it's 100%. It ranges from 300 to 850. 300 to 579 means you have a poor credit. 580 to 669 means your credit is fair. And then 670 to 739 means you have good credit. And of course 740 to 799 you have very good credit. From 800 to 850 you have excellent credit score. So these credit scores are used when determining how much you can be loaned, how much they can trust you on, and what they think is comfortable for you to make payments on. So if you go to get a loan, and let's assume one person have a credit of 799 to 850, and another person have a credit of 640-ish. The person with 850 will get a lower interest rate because his risk is a little bit not too bad. So the bank is considering this person have a good history, have a good credit history, so he or she is likely able to pay back more than the person who have 600 credit. So the risk of 600 credit is very high, and that's why the interest rate is higher on that side. How can you be able to build your credit as a new immigrant? You've come in, you don't have any credit. Where do you start? So first of all, you have to start by applying the social security number so that you can be able to get a bank account. So without the social security number, you will not be able to get a bank account. After you do that, you can start by having secured credit card. Secured credit card is a credit card whereby you deposit. So you save some money, like 500, let's say, for instance, you deposit 500 on that account, and then they give you a credit card worth the amount you deposited. So the maximum amount you can use on this card is 500. That amount is secured because you have a deposit of the same amount. So what you do with this credit card, you are using it and making sure you pay that amount you've used every month. Each and every month, when the payment is due, you make sure you pay that amount. That will help you build your credit from scratch until a point where maybe in like 9 months of paying your credit very good, then you're gonna get the chance of applying an unsecured credit card. This unsecured credit card don't need you to deposit anything. By this time, they have faith that this person have been paying good on this side, so we expect him to continue paying good. This is how you start building your credit, slowly by slowly. The next thing you can do after now, you move from that first card, you have built your credit to around 500 after like 1 year of using it and paying it back. The other thing I find easy, something that can build your credit very quick is buying a new car. A brand new car. Whether it is a small car, whatever you can afford to pay back. So this car, you don't have to have it forever. But the thing is, when you buy a brand new car, the risk is kind of secured because the car is new and the person lending you the money knows that there is a collateral. I can take this car in case you don't pay the money, and that reduces the risk of how much the lender can lose in a case where you don't pay back. So that will help you build your credit, boost your credit to another level. But when you consider the factors, all the factors that they look at when they are offering you the credit, as I said, the main factor is the payment history. That one determines 35%. And then the debt amount, the amount you owe is consolidated. And now that debt amount is used to gauge how much you can be able to be given and be able to pay the rest of your debts and what you are asking for at the moment. So that debt amount, take 30% of the 100%. So the payment history is taking 35%, that is the major one, followed by the debt amount. This credit history is very important because anywhere you go, even nowadays when you go to look for a good job, they pull your credit history because the credit history can tell what kind of a person you are. You don't need to know anybody by who they are, but when you look at their credit history, it can tell how disciplined this person is. And the same discipline, if this person is disciplined outside, even if we accommodate this person inside our work environment, this person is going to perform. So you see, it's not only for the loans. Nowadays, it's being used by other places like the insurance too. The insurance will consider the risk of this person. So I want a car insurance, and they'll go and pull the credit history and be able to see what kind of a person are we giving an insurance here. How risky is this situation? So your credit score will determine how much you are going to be paying for the insurance. Most important thing is paying your debt. Nyinyi wa Kenya mna hako katabia kakutolipa madeni. Yeah, if you don't pay your debts, just know you cannot cheat this system. The system is very, very intelligent. The system the system will bring all your debts together. The dates you paid them, the date you defied paying the debts. If you have ever filed bankruptcy, everything you have done is under one roof. And this is the credit score. And that is what determines your risk ratio. I just talked about how you can make your credit from scratch, how you can build it from scratch if you are a new immigrant. So the other thing is, this 15% that calculates the length of your history, how can I be able to go past that? So you just arrived, after a few months, your history is just few months, and now you want to make this history a little bit longer so that you build more trust. So the thing is, I have always said, don't burn your bridges. The people who you have, the close people you have, the people who hosted you, those who can help you go around the length of your history. So for instance, if you approach a friend or your family member who have a good credit score and they have been here for long, you can ask them to add you in their credit card as an authorized user. So if I have a credit score of 850 and I have been here more than 20 years and I add you under my credit card, it doesn't mean that you're going to be using it. So I'm still going to have my credit card, but I just added you in my credit card as an authorized user. I put your social security on my stuff and you will inherit the good history I have. The good history including the number of years I have been holding that credit card. So suppose I applied that credit card like 15 years ago, so you're inheriting 15 years of good credit. And that will get you over the 15% that is considered to be the history of your credit. So as I have said, without a good credit, it's so hard to even buy yourself something. It's not easy to get cash. When you consider we have the inflation, we have a lot of struggles out here. So it's so hard to find a big chunk of money to do these things on cash. But using your credit, you can be able to go past that and be able to make payments on all these things. So you can be able to acquire a house and be making payments for the next 30 years, 15 years, or you can be able to buy a car that can take you from point A to point B and you'll be able to make these payments. That is an easier route of you building your profile, you know. As they say, it's so hard to even become wealthy if you're not using loans and stuff like that. Most people who are wealthy have used at some point. They took a loan and they were able to buy an asset and then they paid that asset within a specific time. It makes things easier for you. The better your credit score, the higher chances you have to maneuver and build your wealth easily. Yeah, and I think that's most of the stuff that we can talk about the credit. I know it's a new system to many of us. Even in many countries, they still don't use the credit scores. They don't have credit scores. So for you to be given a certain amount of money, you have to have guarantors. You have to have certain amount of money in your account to be even given this amount. So here in the US, you don't have to have all that money sitting in the bank. If you have it, well and good. It's going to help you in one way or the other. But if you don't have it, you can still be able to move around by showing you have an income that comes in, you pay all your debts, and that way nobody is limited to doing what they want to do, as long as you are disciplined on that one thing, your credit. Yeah, and that's all for the video today. If you have subscribed, thank you very much. If you have not subscribed, what are you waiting for? And on that notification bell so that every time we post an interesting video like this, you will be the first one to be notified. And until next time, see you guys.